What's up, people? Thanks for dropping by the channel today. I want to talk about a stock that I bought recently and show you how I plan to make a profit on this stock, even though I've already committed to selling it at less than the purchase price. And this is going to highlight the power of a properly executed covered call strategy. The stock ticker symbol is GSAT. And like I said, I bought the stock at a higher price than I planned to sell and still come out with a small profit. And that's what we're going to look at in today's video. All right, let's get it. Ticker symbol GSAT is Global Star Inc. And when we look at the charts for Global Star Inc., up until January 2021, they were trading under the 50-cent mark. But after January, they started to shoot up and they're beginning to head towards the $2 mark. What it looks like right now is the support is the $1 mark. So when the price hits the $1 mark, it seems to go back up. And the resistance right now seems to be at the $2 mark. Yesterday, the 26th of October 2022, it closed at the $1.91 mark. But I executed a trade on the 25th of October 2022 where I bought 100 units of the stock and I immediately sold a covered call at a price lower than the price that I bought the stock. Because of the premium that I've earned from selling that covered call, I'm still guaranteed to make a profit. And this is what I'm going to demonstrate in this video. So let's look at the execution of the trade and the calculation that shows how much profit I'm going to make at a minimum. So here is my Tastyworks transaction history for the last couple of days. And you can see here on the 25th of October, I bought 100 units of GSAT at 1.82 and a fee of 8 cents was charged for that transaction. Immediately, I sold a covered call for $1.50 and I received a premium of 44 cents per share, which means I received a total of $44 for selling this covered call, and there was a fee of 14 cents that was charged. So this is a breakdown of these two trades that we've just executed. As mentioned, we started this transaction on the 25th of October 2022. And what we did was we purchased 100 units of ticker symbol GSAT. The total purchase cost was $181.83. There was a fee of 8 cents applied to the purchase. And then we sold a call for the $1.5 strike price. And we got a premium of $44. And there was also a 14 cents fee that was applied to the call contract that was sold. And since the call contract will expire on the 20th of January 2023, that is an 87-day to expiration call contract. What this means is that if the price of GSAT ends up being more than $1.50, which is the call strike price, on or before the expiration date of this call contract that we've just gotten into, we are under obligation to sell 100 units of GSAT at $1.50, and that means that we will receive $150 on assignment. There's a potential of a $5 assignment fee that will happen. And so when you look at the total transaction, the net capital deployed, which is the 181.83 plus the 0.08 plus the 0.14 minus the $44 received equals to 138.05. And then when we look at the potential proceeds at assignment. This would be the $150 received less the assignment fee, which would be $145. And the difference between this $145 received and the 138.05 deployed is $6.95. This translates to a 5.03 return over the potential 87 days of this call contract. Now, it's possible that given that GSAT is trading at 1.91, we could well be assigned before the end of the week. And if that happens, then the total time for this transaction will be way less than the 87 days that is allocated here. However, if we go with that 87-day period, this 5.03% return on investment translates into a very healthy 21.12 return on investment per annum. That means if we were to rinse and repeat this transaction and get a 5.03 return, we would achieve a 21.12 return. That is not a bad return for any investment in this day and age. This whole transaction highlights the power of a properly executed covered call strategy. As you can see here, we bought a stock at a particular price and we're committing to sell that stock at a price lower than the price that we bought the stock. In the normal scenario, that is not something that anyone would want to do, buying something at a particular price and selling it at a lower price. But because we've gone and deployed the covered call strategy, we can afford to do that and still come out shining and making profit. This is the beauty of covered calls and options as a whole. If you find the right stocks and the right strategy, you can actually execute that strategy and still come out with good profit potential. So there you have it. Another interesting video on the power of options, the power of covered calls. We hope you enjoyed it. If you've got a question, please leave a comment in the comment section and we'll be sure to respond to any questions. And if you've been watching our channel and you haven't subscribed, please do us a favor. Hit that subscribe button and also please hit the notification bell so that you get to see new videos as soon as they're uploaded to this channel. You can check us out on Instagram and on Twitter for more interesting and uplifting content. And if you know someone who will benefit from watching this video, please share it with them. Do us a favor, also share the video on your social media feeds. We'll see you again with another interesting video where we talk about how you can make money and live a better life.